All right, and welcome back for the episode of This Week in Charts via Carnival Trades and Wall Street from Main Street. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivaltrades.com for swing trading, alerts, analysis, and live day trading. Anyways, let's get into it this week here. So we do have some headlines here the past week. Obviously, a down week on Wall Street, though we did bounce a little bit on Friday. But one of the bigger headlines here, we talked about a bounce earlier in the week. Last week's video, we did get that. Although we did have a pretty big downdraft on Wednesday, and a couple of headlines here. One of them, Nick Chimiros from Wall Street Journal. He is a known Fed insider. This is the guy that the Fed puts out when they want to get a point across to the market. When the Fed wants to make a policy change, they put him out there, and essentially a way to kind of prep the market. And this came from him, and it was a quote from Bill Dudley, former Fed head, saying that essentially he's changed his mind, and he said, like, the Fed needs to cut now in July, which is this week. So this is it's going to be this Wednesday is the next FOMC. We also have packed earnings schedule here this week as well. But essentially that was the start of what happened on Wednesday morning, which Spider's breaking its longest streak without a 2% drop since 2007. So almost a full year, 356 sessions. And you can see here, obviously, on Wednesday, that big gap down. So this, this story kind of broke in the morning. And that's really what kind of caused the market to worry about recession a little bit here. Obviously, we've talked about a little bit of an unwind in the yield curves here. You can see here the gold to copper ratio starting to uptick here and break through some these recent highs that we're unable to break through before, and we're now making higher highs since 2020. So definitely starting to see that recession uptick. We can talk about the yield curves. We will anyway, but I'll just show you here right off the bat. You can see the 210s not quite hitting new highs going back to 2023, but it's definitely getting close. And the 3-month 10s are still well inverted, though. So this is one that is not even really close to uninverting. In fact, we're actually making lower highs here. So definitely some mixed signals there. We had PCE on Friday. That came in mostly in line with expectations, actually kind of upticked a little bit. We had GDP as well. That came in a little stronger. That did help the market out. We all know that's probably going to be revised down, but in the short term, and this is, to me, it signals a lot of stagflation, right? These signals where you have continued kind of persistent growth indication, growth statistics, but you have other things kind of pushing the other direction. So it's kind of stagflationary, a lot of mixed signals here. But nonetheless, definitely starting to increase that risk of recession coming up. Obviously, timing that is, a little bit of a fool's errand. A lot of people go broke trying to do that. But nonetheless, that did bring the market down. It snapped that streak there. And you can see on Wednesday, pretty good decline. I still think the market here in the near term, we're definitely closer to support than we are to resistance at the current time. I think what the likely move here is we could see a little bit more downside, maybe early in the week. Kind of like how we saw, maybe the inverse of last week. So last week we did see that bounce Monday, Tuesday. And then we kind of saw down into the end of the week, although we did bounce on Friday. I'm thinking kind of this week would be sort of the opposite, maybe a little bit more continued downside with relief after FOMC. Remember, we do have, there's this thing called event volatility, right? It's the FOMC is a known event. Apple, Amazon, Microsoft, AMD earnings are known events. There's lots of hedges purchased prior to that, which makes it difficult for the market to have a big downdraft, even if news is bad. And I think especially kind of going down into the FOMC, which is what we're doing, it's likely that Fed takes a little bit more of a dovish tone just to kind of balance the market out. So I think that in the near term does create the opportunity for some type of an upside move here. Does that result in lower highs? That's the big question. The big level to get through right now, just in the immediate short term, is 5,500. That's been resistance here. You can see on if we just go to an intraday, we broke that late last week, actually not last week, but the previous week, And then we had the bounce Monday, Tuesday. We gapped below that essentially on Wednesday, and we have been unable to get through that. So this is kind of your big relief rally trigger here. If we can get through 5,500, you're going to see we also we sliced this trend line Thursday. We bounced back up above it on Friday. So we are kind of flirting with support. Also on the triple Qs, if we put our trend lines back up here, you can see perfect hit of this trend line here and the 100 moving average. So I think we're at a good level of support here. But believe it or not, the Qs are down over 7% in about 11 trading days. So this correction here, which took a month, we did that in not even 2 weeks on the triple Qs here. So, starting to hit some oversold readings. Again, that's why I think going into these volatility events will probably get some type of a relief rally. Question is can buyers come back enough to push us back to double top or even a new nominal high? That's certainly a possibility, and we'll continue to monitor that. But right now, big level here for the Qs is 480. You got the gap fill up there as well, and that 5,500 handle on SPX. Those are big levels to get through. If they can't, then we could be starting to look at coming back down to the lows after a bounce and possibly even making new lows into the fall. But right now, we're still seeing signs of some rotation, right? We're still seeing those small caps. And I don't think I've ever seen this. I've said this in the trading room multiple times. I've seen the Russell be strong with the NASDAQ down. I've seen the Russell be stronger than expected with the S&P down. But we're talking about literally the opposite direction, right? The Russell has been up the last 2 weeks, green, like bright green, with the Qs down tremendously and the S&P down tremendously. This level of dispersion is absolutely enormous. If we look at an intraday, I can show you right here. Here's Wednesday, right? We had a huge surge and we held up all day long. Thursday, we had a huge surge, held up all day long. And you look at the triple Qs, they're just going down. So I'm just seeing this absolute massive amount of dispersion and disconnect here. And, rotation can be painful. This has happened before. I can show you an example here. Going back to 2020, if you'll recall, a lot of people, it was the same kind of narrative here back in 2020. I know a lot of people don't remember these things, but I do. Look at the NASDAQ 100 versus the Russell off of the 2020 lows. It was all about, Mag 7. They didn't even call the Mag 7 back then. It was called the FANG. And it was like, the rally, the breadth isn't good enough. The breadth isn't good enough. The breadth isn't good enough. And eventually we had a correction in August and September. You can see lower highs here on the Qs. And the IWM started making higher highs. But you still had this pain. You still had 10% correction here. And then what happened after that is the IWM started to outperform. We had that big tear when yields bottomed in August, and the IWM went on this huge tear up into March. And you can see how the performance kind of flips and the Russell starts taking over. That's essentially the bull case here. I mean, we can talk about recession until we're blue in the face, but people have been talking about recession for 3 years now. Who knows? They could drag it out a little bit longer here. There's a lot of fiscal spending going on, and that does offset some of these things, which creates that stagflation environment we talked about a minute ago. But that's the bull case here, right? We consolidate this move on the Russell, and then we go to all-time highs. So that's the bull case going into the fall. You can disagree if you want, but you always got to look at the other side of the trade. And a lot of people, a lot of the reason why this market has kept going this long and kept rallying this long, and the Qs have kept rallying this long, is because there's a lot of people who haven't believed in it. And, you're kind of getting that climbing the wall of worry effect. So in any case, that's what's going on here. Again, short term, I think, we might see a little bit of downside. I didn't really see signs of a bottom based on last week's price action, but I do think we are kind of close to a short-term low. And, again, watch that 5,500 handle there. Anyways, the diamond here, the Dow held the 400 handle. We can put that line in there. So right there, 400 even, and you can see the DJI, obviously 40K. That lines up perfectly with that, so that's getting defended right now. Another big level got hit on the SMH. We called this out in the trading room. It was a beautiful trade. Thursday, look at this blue trend line here, going back to the October low. Perfect hit. And we have pierced a previous all-time high. We hit that 100 moving average, and you can see here as well, if we take a fib retrace from the April low, perfect 618. It was a beautiful level and a beautiful trade. Members made lots of money on that. So it was a very nice level. And I think, again, this is kind of why I'm thinking there's not a lot of downside left here on this leg. Just a monster level, and we should start to retrace at some point this week. Again, I wouldn't rule out a pierce of a pierce of the lows or one more little dip, but I do think we'll get some type of relief bounce here shortly. IGV, again, continues to be strong. It did have a good outside move on Wednesday, but was actually green on Thursday when, again, the rest of the market was red. So you see the Qs were red there, spiders were red, heck, semis were red, and IGV actually green. So I think cloud continues to hold up. CrowdStrike, obviously, at the fulcrum of some of this selling here, but IGV's held up, and you can see ServiceNow actually hit new all-time highs on Thursday and new all-time weekly closing highs. So cloud actually, showing some strength here, and again, IGV's a pretty strong sector still. Dow Transport's here, again, bucking the trend, right? So we've got this recession talk here, but positioning matters, right? So if everybody's betting on a recession, then some of these stocks can squeeze anyway. And that's kind of the frustration of it, and that's why timing this is very difficult. Dow Transport's erased the entire sell-off. In fact, here you go. Dow Transports were green on the week, right? So that doesn't look like something that's going into recession, does it? But that's the power of positioning. And right, everybody knows like the yield curve's inverted, right? So if everybody's betting on it, that's how you get these big squeezes. That's how you get these blow-off moves. A lot of money is lost betting on a recession. And there's a very select few that actually make money on it. But in any case here, you can see transports still have a pretty bull pattern here on the weekly. Higher lows and equal highs. So I wouldn't rule out some type of surprise here to the upside, honestly. Anyway, so back to yields here. So 2-year obviously down. Next level I got for this is right around 420. It is starting to inch lower here, and obviously rate cut expectations are increasing. Very much so. 5-year, again, same thing, weaker. I got 395. The long end of the yield curve, I'm still adamant that this is not going to go much lower. I think inflation expectations are very well anchored, and I think a lot of people are going to be surprised at how well the long end holds up. And you can see the 30s here as well. Still has the potential for higher lows here. So we're getting an unwind of the yield curve, but it's not... typically what will happen is all ends of the curve go down, and then the 2-year just goes down faster. But right now we're seeing the long end hold up as the 2-year goes down. So it's kind of a double-edged sword here, and that's why stagflation to me is the base case. But this is stuff that can take a long time to play out. XHB, again, continues to be strong here, up 3 1/3, new all-time high, new all-time closing high. And again, we still continue to see certain sectors perform well. Consumer staples actually acting well also. I missed a chance to get in on this. I had a buy signal on this pattern here, and it just missed the boat on me. But good price action there in XLP. Not that far off all-time highs. And XLV, same thing, new all-time highs, new all-time weekly closing high as well. So some of those sectors continuing to perform. VNQ, commercial real estate, still working on a bull pattern here. Very good breakout. We talked about this weeks ago, and it broke out. And again, it looks a lot like the Russell, right? So big breakout and then just kind of consolidating. Fins here, again, XLF holding up. Again, just good pullback pattern after an all-time high. And again, heavily shorted sector, regional banks. So again, 1.73. You can talk about recession all you want, and you can be short these names, but I think these will continue to go up as long as people continue to short them. And again, we're getting close to recession, which means a lot more people are shorting them, and that's probably why they keep going higher. So we continue to get these squeezes here. This has actually exceeded my target. I think now it can probably go to this red bar high on the weekly, which is right around $61. This was the breakdown, right? So if we go back, that's where we broke down from, with the Silicon Valley Bank right here. That's where the volume really started to pick up. It doesn't look like it because it's so much larger here, but if we go like right there, you can see the volume is actually pretty high on those candles, and that just gets dwarfed by the once the news really broke. But Yeah, I mean back to those pre-Silicon Valley Bank highs. That's next stop, 60 to 61. KBE again, that's exceeded my target as well. We talked about this trend line. It's I mean next level. I'll just say 56. So again, it's not that simple. Just because we're going into recession doesn't mean it's a slam dunk to short the market and short some of these sectors. Anyways, broker dealers here down 30 basis points on Friday. Still bull pattern, still holding up. Oil has been all over the map here. Down early in the week, a lot at shop, closed green Thursday, and then got hit on Friday. I'm just going to give this neutral to downside bias to probably 75.50, which is the 618. I probably would not step in front of that just because we've consolidated. So next level, I'm just going to say 73.50 to 74 right now. I've avoided oil lately, outside of just quick short-term trades. However, I do like XLE a lot. In fact, this actually has a pretty bullish pattern here on the daily and the monthly. So if you take a look here, and in fact, I'm just going to try and find this. I had it set up, but you can see the higher lows there on the daily. I do like that very much. Here it is. So energy or hedge fund positioning energy is at the lowest it's been since you got to go back to like the tech bubble. That is something that gets my attention, especially when I see higher lows here on the daily chart. And you guys know I've talked about this from time to time, but the monthly here, that's a really nice monthly pattern. Big wide range green bar, pullback pattern, narrow body candles. That's a tight bull flag. Trend is up. This is going to make new all-time highs. So I really like XLE. I also like, XOP kind of by default, but I really like OIH Oil Services. Again, tightening range here. Good power move on Thursday, by the way, but tightening range. And on the monthly, again, this is going to, 450, 500. It's not going to go there in a straight line. It's going to take some time, but this is a power pattern here. So I think energy could be another kind of rotational play that nobody cares about right now, which is good. I don't want people caring about it. When no one cares about it, that's when I want to be buying. So, but definitely caught my eye there on energy. Uranium's still a little bit weaker here. I would be careful. See, CJ is the only name I would really trust right now. You do have a head and shoulder top in this though, and that could take you down to 39. So just be aware of that. URNM did have a failure last week on the weekly time frame. We closed below that wide range green. So that's in corrective mode. And then NJ, same thing, that closed below the green on this week. So I'd be careful with uranium names here. So they did break that breakout bar. Nat gas here, we got a contract roll coming up. That did make new lows, and I have avoided it for right now. I do think it is close to a seasonal low, though. It does tend to put in a bottom sometime around July, and then we kind of trade up into really November. So, I mean, it could be worth, bottom picking down here, but it's tough. I'd rather wait for it to give a signal here first. But it is definitely getting attractive. Dollar index not really doing a whole lot. Actually just went sideways all week, but you did get a defense here. And short-term bull pattern, I'd give it the upside bias to 105. Right now, the yen shorts kind of got hemorrhaged here. Look at this perfect technical position. So right to that pivot high, pivot high, pivot high, and look where we went. Right down into that, and it got defended there. And it's probably not a coincidence that's where the market bounced. But dollar index still holding up, not doing a ton. Gold here did back off again. It's going to show a huge green candle on Friday. That's because of the contract gap, so that won't. It wasn't actually up as much as it looks. If you look at the GLD, it was basically up 1%. But either way, gold here is still holding up. I still think this has a little bit more time on the clock, corrective wise, but I think it'll be a buy pretty soon. And the same thing goes for the miners, SIL. And silver itself, although silver did take a pretty good slice again. Recession narratives dominating the headlines. Industrial demand, for silver. That's going to make it underperform gold here as long as that's continuing to be the headline. But I do think these will be dip buys very soon. Platinum probably as well, although we did break this trend line finally this week. It is into a pretty good level, though. We did hit a 618 fib retrace. So we'll see if that gets defended. And the palladium here, still on the softer side. Again, still is a possible catch-up play in the long term. And then copper here finally hit the 200 moving average. I do think it is very attractive down here for a bounce. That's just a bounce play right now. Again, you got to be careful. There's a lot of recession narrative, like I said, dominating the headlines. But this is a pretty good technical level down here with the 200. There's another level just below $4 as well that I calculated out. But I think it's good for at least a bounce play here, or is about to be close. Bitcoin very strong this week. We had a very good bid here. I did call the low pretty nicely. I sold too soon, unfortunately. And then guess what? We went right up to that upper trend line, pulled back, and now we're holding up. So Bitcoin's still very bullish here on the daily and the weekly. I just think, again, personally, I say this every week, but I'm just saying, I think the monthly you're still too extended from the 20 MA. So I think it just needs to catch up. I think if it catches up, this will go much higher, and I mean much higher. But right now, there's nothing wrong. It's doing everything it needs to do. I just think that if we try to break out here, I think it'll be failed. It's going to have to pull back. That's just my 2 cents on it. I'm not bearish on it though. Definitely not bearish. ETH ETF did debut, and we did negate that green bar with the sell Thursday. So I'd be a little careful with ETH on the daily. The ETF debuted, so it was a little bit of a sell to news. You can see here it got smoked since the IPO. But the weekly pattern is still pretty good on it, though. So I think crypto is still pretty solid here. I just think it needs a little bit more time before it's ready to break out. But again, back to this SPX here. Again, we got defended at this trend line here, a little pierce, maybe a little liquidity grab. Again, we're going into a lot of earnings: Apple, Amazon, Microsoft, AMD, plenty more here. You got the FOMC. So again, selling down into those events kind of tends to price some downside in. We're down over 7%, almost 8% on the Qs in less than 2 weeks. So I'd have to favor. I'm not saying we can't go lower, but I would favor the larger move here in the short term is probably going to be to the upside at some point. But again, it's going to be a big test here at 5,500, and then above that, there's some more levels we got to work through. But that's really the big one to hurdle if this market wants to have any sort of relief rally here in the near term. So, anyways, guys, I'm going to wrap it up here. You guys take care. Don't forget to come find Jason on Patreon. Come find me on carnivoretrades.com, and I'll see you guys all next week.